All right, you're looking at a weekly chart of the Nasdaq. This is my weekly review. Thank you for watching. And if you didn't have any access to any financial news media or any noise, and you took a look at this chart, without the inverted yield curve and all the doom and gloom out there, you would say this is textbook cup with handle. There's the three legs down in August, September, October, and then now we rip 8 weeks in a row. We took out the 14,446, and the Nasdaq also took out the 14,646, and I think it's got its sight set on the 16,212. We're just gonna have to give it some time, but that is a perfect cup with handle pattern right there, and then the breakout to the upside. So there's no arguing, no debating, no gloom and doom, no inverted yield curve noise or recession to talk about. If you just look at the charts, it's making higher highs, higher lows. That's the definition of an uptrend. And the Nasdaq is, though, I must admit, I'm going to go to the daily chart here as we can look at it. And there you can see that three waves down in the summer, the August, September, October, and then the flat out just rip your face off trade move higher the last 8 weeks. Anyway, I wanted to show the Dow Jones Industrial Average because this is making new highs. If I pan out here, you can see that it's made new highs over the 36,952. It's trading close at 37,385. So the Dow is, I guess you could call it the leading index. It's 30 stocks, but it is making new highs while the Nasdaq is not. Just wanted to point that out. I will go back to the Nasdaq because that's the index I mostly watch, and it was up 179 points last week, or 1.21%. I have to go to the daily because we had this air pocket on Wednesday, and it freaked some people out. That inverted hammer candle on Wednesday, and then strong markets, they just get it right back. It fell 225 on Wednesday. It got it 185 back, and then roughly 30. So it's like 10 points short of the close on Tuesday, but it's up for the week. And just a very strong index. And if you look at history, these in December, the last 2 weeks of December and the first 2 weeks of January, these air pockets are pretty common. So I do want to point out I'm going to go to the IWM instead of the Russell because it gives me the volume here. And this is a daily chart. You can see the base on base pattern, but now it's starting to move higher, and it took out the 198 last week. And if I go to the weekly chart, you can see how long this thing has been consolidating. The longer the base, the higher in space, as the saying goes. But this has been doing this for, the better part of like 2 years, when the last time was at 200. Okay, so it was back in January of 2022. Okay, so it was at 188 to 203. So it's been 2 years that it's just been doing this consolidation dance. And now you can see this pattern. It looks like it's starting to break out. And this is coinciding with the 10-year. As long as the 10-year keeps coming down, you can see that peaked on the weekly. As long as this thing keeps coming down, the small caps are going to do better. You can see the big rise here, and now starting to give back a little. So as interest rates come down, which I think they will in 2024, your multiples are going to expand, which is good for growth stocks, small caps, and risk, the risk on environment. Anyway, I want to take a look at some of the Mag 7. I know people think that they're going to do better next year than they did this year, but these stocks have been up a lot. And I must admit, this is they all look really good. This is a nice cup with handle pattern. Apple pulled back to its 21 EMA on Friday. It had a little bit of negative news, didn't go down much on negative news, but you could see the declining volume, which is pretty normal for the holiday trade. But declining volume, pulling back to a moving average. People have written books about that and made a lot of money just writing about that one pattern. Microsoft, pretty similar here. You can see the cup, and then it ran up to 384, then pulled back to the 21. It's just, hanging there and decreasing volume. For Microsoft, that looks very good to me as well. Meta made its move. I mean, this thing had a really nice week last week. It's a weekly review. I should be showing the weekly charts, but you can see that that's a nice breakout there of 5% for Meta Platforms, which has been on our ready list the last couple of weeks. I think I took it off last week because it made a move and it just ripped 5% higher. So congrats to the longs there. These things still look good. Amazon had this consolidation 3 weeks tight, and it's starting to push away from its base now. They're up more than 2% last week. Amazon looks good. You can see the declining volume here as it makes this little wedge pattern. So I still like Amazon. Google, part of the Mag 7 that is doing really well. You can see this cup with handle, and it's just hanging out there near that 140 buy point, essentially starting to push away. So Google looks good as well. Tesla, another one of the Mag 7, double bottom base pattern here, pulling back to a moving average in lighter volume. Sound familiar? And that one looks good to me as well. You can really see the double bottom there, consolidation from, this is 6 months of consolidation, which is, that's a pretty good size base. NVDA, pretty similar, double bottom pattern, now trading near its buy area. It did make another run up at 500, and it just can't seem to get above that. I know, the naysayers will say this is a triple top here, 502, 505. I think it got back up to like 502 last week on Monday. You got to watch out for those Monday morning gaps. 504 on Monday. Pull back on Wednesday down to 480. Recovered a little bit. Had an inside day there Thursday. But anyway, those are the Mag 7s. You got to cover them because they are the large stocks that move the indexes. Anyway, I'm going to move on to some stocks that I really like. One is CrowdStrike. This made its move. We got in at about 160, and I talked about this many, many times, and it went up to 260, and there's a time to trim. As it digests its gains, you can see that massive move out of this, really, essentially, this flat base pattern. It was, if I go to the monthly, it was being accumulated during the summer months while the Nasdaq pulled back, which was a hint for me to get in. And so anyway, CrowdStrike looks good, just, consolidating gains there. Zscaler, pretty much the same thing as CrowdStrike, had this nice run, now digesting gains in a lighter volume here. As you can see, the last few sessions, and this is pretty normal for this time of year, real, decrease in volume there as it pulls back to moving average. You look at the weekly, and there you go, man, big breakout, big move. It's up the last 8 weeks with the Nasdaq as well. A couple other ones that I don't normally, get into, but I kind of like this. OKTA has been consolidating for a long, long time. I mean, it was trading around this 89 area in March. Yeah, so it's been a long while here. And if I look at the daily chart, you can see that kind of messy double bottom pattern here, but definitely trading near a buy point. You can see how messy and choppy this thing is, though. And then I have to mention S is one of our gaps higher. I'm going to get into the stocks that gapped higher, but this one just won't back down. It's a Tom Petty stock, and pulled out of this base, and I was going to buy it on a pullback, but it just really hasn't. It keeps ramping higher, as you can see, 10%, then it went up 21% on earnings. And then last week was up 9.8%, so I thought for sure it's going to pull back, but nope, it had other ideas. It was up nearly 5% last week. And if you look at the daily, not really giving you a chance to get in. Higher highs, higher lows. These moving averages are trending higher, so that looks like a phenomenal stock. And of course, I've got to go show you Fortinet, which I believe bottomed here. It had a couple of disastrous moves after earnings, but kind of bottomed here now. It's pushing up towards 60. Earlier, a couple of friends of mine bought it below 50, and they're very happy with their purchase. Their entry price, there you can see the big move on earnings, down to 44, now 59. So a nice move for Fortinet. Anyway, that's it for the cybersecurity. I've got to get to the semiconductors, because you're not going to have a big AI rally in 2024 without the semiconductors. And this is Broadcom, which made its big move. And now pulling back, it's flagging essentially in lighter volume, which is what you want to see. It's got this like a flag pattern here. Very nice. Now this one is giving you a chance to get in there on the daily. If you look at the weekly, it looks like a short stroke. It's not a short stroke, but in spirit, I would say that is a short stroke. As the stock went up a big percentage 1 week and then gave back very little. It went up almost 20% 1 week and gave back, less than, 0.75%. So, and a very quiet week. That's what you want to see. The big move up with volume, then a quiet week. That's essentially what a short stroke is after a big move. But, it did make a high above the prior week's high, which kind of disqualifies it. In spirit, though, I would say that is a short stroke pattern. This is AMD, which I still like. You can see how it broke. On the weekly, you can see how it broke above its downtrend line here. Very nice. And then had that 3 weeks tight and then just rammed higher. When Lisa Su announced the new product, there you can see the consolidation here and then the breakout above. There's your downtrend line that I tried to show you on the weekly. And broke above that and ramped higher and just pulled back last week to a 10, found support. This one looks really good to me. And the other one I wanted to show is ALGM. You're going, Marty, what the heck are you showing this for? It's below its 200, starting to trend higher. The 10 and the 21 have rallied through the 50. It still has decent sales and earnings growth. I'm getting into the smaller cap stocks. I'm starting to embrace them, getting away from the large cap. This one, it's got nearly a 6 billion market cap with, roughly a little over 1 billion in sales. So 6 times sales is cheap compared to NVDA, but it's all about the growth. It's got 29.63 EPS growth. So we're just going to watch this, wait and see. This is an IPO which had its due diligence phase and it had its advanced phase, then sold off, and now we're just going to see what happens here with Allegro Micro. And I guess I have to go to ARM because there's another IPO. It looks beautiful here on the weekly. You can see the buy point there, and then the last 6-7 weeks, big volume there. So this one looks good as well. Textbook stuff right there, huh? Cup with handle, breakout, trading higher highs, higher lows. So nice trend for ARM. I'm going to get to some of the software names. Just a couple that I had on my ready list last week. This one, fortunately for us, broke out to higher highs. You can see the pattern there, the double bottom, the move higher, and that's a nice move there, up nearly 10% last week. Thank you very much. I'll take that every time. The other one I like is Monday, and you can see this nice consolidation, 3 weeks tight, then it moved higher. Now last week, it was flat on the week, which is okay. I'll take flat. I don't care if the index is going up and my stock is consolidating. I think it's given us a chance here to get in with this little pinching action as it moves back to the moving average on lighter volume. So Monday's another one that I like. And then, team is just taken off here. It broke out of the base, moving higher highs, higher lows, made a high on Friday, then pulled back towards the end of the session. So a team, that's Atlassian, looks good as well. I'm going to move on to the retail stocks, one of my favorite sectors. Abercrombie and Fitch, the biggest gainer in the S&P 500 this year. You can see it on the weekly. It's just formed a base and then just kind of ramped. Like, see you later. And congrats to the longs there, Abercrombie and Fitch. That's a big surprise. But I wanted to get to Nike because there's a lot of controversy about their earnings report on Thursday afternoon. Then it sold off, like 12% on Friday. And, people want to, Nike is the largest cap in this group by a mile. It's the big kahuna in the apparel shoes. And so they had some trouble in China. And there's 2 ways to think about this. Like, it's just Nike and they're getting their lunch eaten by Deckers and Skechers and On Holdings, or it's general market weakness over the globe and retail, the consumers pulling back. So we're going to find out when those other companies report. But I mean, you got to look at Deckers here. This thing, which one would you rather own, Deckers or Nike? I don't think there's a question there. Deckers rip tire had this little 3 weeks tight pattern in here, right? And looks good to me. It did pull back with the Nike report to the 21 and then bounced a little bit. On Holdings did the same thing, pulled back to the 50, bounced a little bit. Yeah, Nike has a big impact on these stocks here. Lulu is another one that pulled back with that Nike report and then just said, nah, I'm not going to do that. If you look at the 5-minute chart, you can see it just sold off on Friday morning, and then buyers came in, drove it up. Some sellers, but near the end there, that's a nice high volume close for Lululemon on Friday. So investors are definitely supporting Lululemon. A couple of other stocks that I had on my ready list recently that have just broken out of bases. This one's Dave and Buster's, which is play. Look at the weekly, it's consolidated for a long, long time. Now it's starting to move. The other one is Texas Roadhouse, which is a stock I don't own, and I've never been to a Texas Roadhouse, but I like this action here. Long period of consolidation and then a breakout to higher prices. It was up, more than 4% last week. There you see it on the daily, just clear as day. Nice breakout, moving higher. Had some big volume here recently, so not bad for Texas Roadhouse. And then Wingstop, another restaurant. I don't go to restaurants very much, but this one broke out and is trending higher highs, higher lows, getting support at the 10 EMA. What's not to like? Of course, the holiday volume is showing up in just about every one of these charts, as you can see here. Just going to be a quiet week probably next week, but look at the growth here. 28, 26, sales growth, and 27.53 earnings growth. Wingstop looks good to me. Okay, I'm going to move on to the drug stocks. I'm not going to spend too much time here. I have quite a bit of information on my site this week. And this one got bought out, so that's a nice move. Usually when drug stocks start getting bought out, I mean, AbbVie bought a couple companies recently. Karuna was bought out by Bristol Myers. And so a lot of these big pharmaceutical companies, they have this expiration cliff on their patents. So they have to revitalize their pipeline by buying these companies. And so I think there's an opportunity in 2024 for, Pfizer, Merck, Amgen. They're going to get in the game and buy some of these smaller biotech stocks. A couple of them that I like. Well, I don't want to give away too much here. CYTK had a positive data, and so that one ramped. EYPT had a positive news. It ramped higher, and I really like the, first of all, it's a heavily shorted stock, and I just like how it pinched in here, made this little flag, and then blasted off on Friday. Short sellers probably covering here, and I would not be surprised to see that trade above the 24.16. That's EYPT, EyePoint Pharmaceuticals. They had a positive trial data or whatever. I have a couple other stocks at my site that I like, but I'm not going to get into it now. Except for I lied. I'll go to Viking, and it just pulled back to its 10 and found support. When stocks get bought out, this is definitely a prospect to get bought out, and it's definitely finding support there at the 10 and making higher lows, which is what you like to see. And I would like to see it make a high above the 20 level. Anyway, that's enough for those. A couple of the oil and gas stocks, you got to look at energy in 2024. I think, it got beaten down this year, but there's some stocks looking good here. This is Scorpio Tankers, classic cup with handle, 3 weeks tight, pull back, shake everybody out, shake and bake, then it trades higher, right? Shake out and breakout, very textbook action there. And then Weatherford's another one that I like. And this one I think is still actionable here as it trades below the 100. We'll see how it behaves there around that 100 level for Weatherford, but you can see on the weekly it's consolidated here. Yeah, it looks pretty good to me. I'm going to move on just to some gaps. I mentioned that I would show some gap stocks. I'm going to show them on the daily. This is Elastic, gapped higher now, is kind of flagging back to a moving average on, lighter volume. So that's classic action there for Elastic. Path, this it's making higher lows and finding support at the 10. It's kind of sluggish though. You want to see these things power higher, but I like this little pinching action here recently on lighter volume here the last few sessions. So keeping an eye on that one. IoT is another one. Got to keep your eye on finding support at moving averages. It's got this little pinching action as well. I think the institution's going to come back and buy these things in 2024. So I'm keeping my eye on these. And then GitLab. another one that's acting well. If I could type in the ticker symbol correctly, then we can actually see the chart. And this one, same kind of thing, right? Same kind of pinch. Finding support at the 10 EMA, a lighter volume. So these are definitely stocks that I'm looking for 2024. They're flashing out of the, their bases. Anyway, a couple leading stocks before I go. AXON, definitely showing leadership qualities. I missed it. Coin, just ramping higher after the breakout. I missed it. This is a weekly review. I should show the weekly. You could see this emergence out of the stage one, and there's the cup pattern, stage two. This is classic textbook action from Coinbase, and the last one is Mara, which man, a lot of people don't like to trade stuff like this because it doesn't have, what they're looking for in regards to fundamentals and stuff. But you can't argue with that. Mara just ramping higher, massive volume. I talked about those other stocks showing lighter volume, not with this stock. There's definitely some buyers here. It ain't Aunt Sally, that's for sure. Anyway, that's it for me, except for I lied in honor of the great Steve Jobs. I got to talk about one more thing, and that's selling. People want to know when to sell, and I only know when to sell when I buy a stock on my losses. I know that I'm not going to take more than a 5% loss, except for I have to go over this SMCI trade with you because a friend of mine, she bought it. I'll call her Missy. And we noticed that it was trading well in 2022 when the rest of the market was dying. And this is one of the tech stocks that was doing well. You can see consolidation and basing and moving higher. This consolidation moving higher. So when it got up into the 90s, I traded this a couple times. When I got up in the 90s, I'd gotten shaken out. And I vowed to myself, I'm not getting shaken out this time. So when it sliced its 50 back here in January, I just held on to it and bought it about 90. So like I said, when you buy a stock, you have to know when you're going to get out, right? At least on the downside. I think you have to have a pretty healthy ego to think you know where it's going to go to the upside. But on the downside, every stock I buy, I think it's going to be a home run grand slam, right? At least I have that hope, and very few are. But if I sell at a 5% loss, well, like I said, I wasn't going to get shaken out of this one because I knew it was strong during the week 2022. So I held on to it, and then it ramped. I bought it at 90, then it ramped up to like 118. And if I was just a swing trader, I just would have sold that right there, taken my 20% gains, whatever, and gotten out on to the next trade. But I didn't. I took a little off, but then I let it run. And that's why I'm saying that if you're trying to hit home runs or grand slams, you have to leave some on the table. Yeah, take some profits. Say if you bought 100 shares at 90, it's what, $9,000. It runs up to 120, it's 12,000. So you take the 3 grand off and let the rest run, the principal run. And lo and behold, this thing just really ramped up to 270, and I didn't sell it there because it had this high tide flag look to it. There you can see and I consulted with some friends about this because I was really nervous about it. But there you can see the pole and the flag, and then it ramped up to 350, where I did take some off at 330 and 350, and then I held for earnings a little bit. And then I had like 37% of my portfolio in super micro, sold at like 330 and then sold at 350, held a little bit for earnings, got the shaft, got hammered down to 270, and that's where I cut it loose. Now, so it went from 90 to 270. That's a 3-bagger. I'll take that every time, right? But anyway, it's just been going sideways and consolidating. It's a stock that I watch, and it makes me seasick. You can see it's got this roller coaster look to it. I tried to trade it one time since then, and I lost money on it. And that's kind of what happens when I return to the scene of the crime. But you can see this roller coaster here. I think, as it rips through its 50, then it pulls back to its 21. Can't stand this action. I think at some point it will break to higher ground. It's got, good fundamentals, nice, sales growth here. I think it's pretty cheap stock, 16 billion, okay. 16 billion market cap for about 11 billion in sales. So this is not an expensive stock at all. Just going to keep it on the radar. And I just wanted to show you how, you have to know yourself. If you're buying a stock and want to hit a grand slam, you have to hold on to something. And if you're just a swing trader and want to get out and take profit, that's fine too. And if you know, you're a chicken little and you want to take your 5% loss, that's fine too. But if you want to hit a grand slam, you have to take some off and allow some to run. And that's, you know, yeah, and you have to sit through a couple of earnings reports too with that principle. So that's the way I traded that one. Just wanted to share that. This is one of my better trades of 2023. So I'm not bragging or anything. I'm just showing a good trade. I have some stinkers too, but I'll get to that at another time. Happy holidays, everyone. Thank you for watching at mcstockcharts.com. We never give up.